Good morning and welcome to the webinar on Workers' Comp Basics for South Dakota Employers. Hi, I'm Sienna Rodzinski, Membership Director for the South Dakota Retailers Association. Today's program will feature a presentation by Brad Wilson of Insurance Benefits and Tom Diefendorf of United Fire Group. Just a few notes before we get started. The phones of all attendees are muted so that we won't be hearing any background noises. We will have a question and answer period at the conclusion of the presentation. If you would like to ask a question at any time, just go to the panel on the side of your screen where it says type message here, type in your question, then click send. At the conclusion of the presentation, I'll read the questions out loud and one of our presenters will provide the answers. And finally, this webinar is being recorded and will be available on SDRA's website tomorrow. First, I'd like to introduce Brad Wilson, who is the president of Insurance Benefits Incorporated. Insurance Benefits is the program administrator for the South Dakota Retailers Association endorsed workers' compensation and business insurance programs. Brad grew up in Burke, South Dakota, and obtained his bachelor's degree in business administration at the University of South Dakota. He is a certified insurance counselor, has an associate's in claims degree, and a South Dakota workers' compensation specialist designation. Brad began his career in the insurance industry in 1993 as a multi-line claims adjuster. Because Brad is a small-town South Dakota native and a small business owner, he understands the challenges you face every day and is committed to being your business insurance expert. Later, we'll hear from Tom Diefendorf. Tom is a senior marketing representative with United Fire Group and works from his home in Beersford, South Dakota. He has over 25 years experience in the insurance industry in the capacities of both agent and company representative. Tom travels the state of South Dakota on a regular basis and is well-versed and acquainted with the businesses and members associated with South Dakota Retailers Association. Tom looks forward to helping SDRA members secure their business insurance needs through the business insurance program endorsed by SDRA and sold by UFG agents throughout the state. Now we'll turn the presentation over to Brad.
Thank you, Sienna, and thank you all for taking the time this morning to dial in and meet with us. I don't know if there's anyone out there from Burke, but if there is, hello, and glad that you're on the line. So we'll get right to it. Starting out with the work comp basics for South Dakota employers. Workers' compensation basics. Basically, what we're gonna touch on is, what is workers' compensation and also what it isn't. Why do you need it? Who does it cover? And when does it apply? So it's almost easier to define what workers' compensation is not. Workers' compensation insurance is not unemployment insurance. It's not disability insurance, and it's not life insurance, not health insurance. Even though it does have components of that built in, that is not what it is. It's also not Obamacare, and it's definitely not a government entitlement program or an employee benefit. But what work comp is, it's an insurance that you as a small business owner purchase that provides medical and disability benefits and also a death benefit to employees for work-related injuries. That's regardless of fault of the employer. Basically, the reason that workers' comp was set up many, many decades ago was so that the burden of the employee having to sue the employer and prove negligence, it takes that out of the equation. If it is a compensable work-related injury, regardless of fault of the employer, the employee has a compensable claim. So one of the questions that I get and we hear fairly regularly is workers' compensation insurance required? There are some states that do require that you carry workers' comp coverage. It's kind of mixed throughout the nation. In South Dakota, you are required to purchase auto liability insurance, but workers' compensation, technically, by the law, no, you are not. You're not required. There's no fine. There's no penalty per se for not carrying work comp insurance if you have employees. But that being said, according to the South Dakota codified law, which is under the workers' comp title 62, as an employer, if you have an employee, just because you don't carry workers' compensation insurance, it does not relieve you of the obligation that you have to provide benefits to your employees for work-related injuries. And so really, here's how the statute outlines. It says that an employee can elect to proceed against an employer in any action at law to recover damages for personal injury or death, or may elect to proceed against the employer in circuit court under the provisions of the work comp title. And the employer, if the employer is elected to operate under the title inclusive. Basically what that means is that if the employer doesn't carry workers' compensation insurance, the employee has the option to, number one, sue them for a third-party liability claim in court. And if the employer does not carry that work comp coverage, here's where kind of the penalty, I'll put that in quotes, the penalty per se is that the employer is going to not only owe the amount of the medical damages, the medical expenses to the employee, they will owe twice the amount of the other compensation, which could be the lost wages, which we also call disability or indemnity benefits, which we'll cover here in a moment. Also the death benefits. So if you're an employer and you think, you know what, I don't want to pay that premium, I'll just take my chances, you may end up paying a lot more for a claim than you would have in the premium if you choose not to purchase the coverage. And in South Dakota, for the most part, most businesses with any number of employees, we don't run across very many that don't carry coverage. Once in a while, you'll find a small business that has never had employees, and then when they hire their first employee, then that's when they realize that they should have work comp coverage. So who is covered by workers' compensation insurance? And the easy answer to that is employees, paid employees. There's an employment contract. The employer is gaining a benefit by the employee, by the work that the employee does. There are a couple of exceptions to that. One being that employee or domestic servants, farm and agricultural laborers, and work activity participants, workfare participants, are not considered employees. Now, what about volunteers? I mean, you may have a business where you have volunteers. If that's the case, most standard insurance companies, well, first of all, automatically are not going to cover volunteers. Some may allow it by endorsement, but it is not very common. Government agencies do have a way to provide coverage for volunteers, for like volunteer fire departments and ambulance services. There's an actual work comp statute that outlines how they can do that. But in the private sector, volunteers being covered is not very common, and most standard insurance companies are not going to accommodate that. So another situation, and I don't know if anyone on the line would have this situation, but if you have like a work study, a high school student who through a class at their high school is getting experience working for you. It's they're getting credits for either maybe college or credits for their class in high school. Two different ways that workers' compensation is handled in that way. If you are not paying them, they're just they're gaining their experience, getting their credit. Basically, you could call them a volunteer if you're not paying them, but the school is responsible for carrying the work comp coverage on that student for their work study activities. Now, if you're paying them, like say if you're doing some type of a program where you're paying them an hourly wage, a stipend, then in that case they become an employee and they're covered under your business's work comp. So just be aware of that if you have any work study situations. So as far as who are employees, now if you're incorporated, say if you're an S Corp or a C Corp, if you're a corporate officer, president, vice president, you are automatically covered as an employee of that business. But there's under state statute, you're able to opt out of being an employee. Many do. Many corporate officers do, depending on whether or not they work directly in the business. Whether or not they take a payroll, there are some minimum premiums, minimum payrolls that are used to calculate the premium that some business owners just choose not to carry the work comp coverage on themselves. The same goes for limited liability companies, LLCs, members, they're treated the same as a corporate officer. They are included in the coverage unless they specifically exclude themselves. You typically do that by signing a form just saying that you are excluded from the work comp coverage under the policy. Sole proprietors, now say if you're a DBA, John Smith doing business as, John's tree trimming service, under those situations, a sole proprietor is not automatically covered by their workers' compensation policy. Now they can opt in, they can be included, and again, if they don't take a salary or if it's under a certain minimum, there'll be a minimum payroll that is used to calculate the premium. Partnerships are treated the same way. If you have a Joe Smith and a John Smith partnership, they also are not included automatically, but they can be, or they can choose to be included. One of the other questions, like a paid family member, you own a small family business and your kids, or you might bring in relatives or friends at certain times of the year to work in the business. Are they employees? Regardless of blood, regardless of your age, if you're being paid by the business, you're an employee. And so if they're volunteers, then they're not. So that's the difference is going to be, what is the compensation? Are they being compensated for their work in the business? So just a quick quiz here. Who is an employee? Any full-time paid employee is considered an employee for work comp purposes, as well as part-time paid, seasonal paid, or temporary paid. It doesn't matter how long they're an employee. It doesn't matter how many hours they work, and it doesn't matter how old they are. So you can see also a minor, somebody under the age of 18 or 16 or even 13. There's no limit, there's no age limit in the work comp laws in South Dakota. So if they are on and they are injured in the first 5 minutes that they are working for you and they're on the payroll, they're covered by your work comp policy. So how about a temporary part-time seasonal 16-year-old? Yep, they're covered as well. What about independent contractors? And this is where if you're in, if you're a general contractor or you're in the, construction or any type of artisan contractor type of fields, are independent contractors considered employees? And the answer on that is no. But that can be a very gray area, and you want to be very careful with that if you are hiring subcontractors and you're a general contractor. So the definition of an independent contractor, you can read it right there, but it's just one who engages to perform certain services for another according to his own manner and method, and that's very important. Free from the control and direction of the contractor in all matters connected with the performance of the service except the end result. So really it comes down to control. That is one of the big factors. Now, I'll show you a few things that the Department of Labor looks at, and they will tell you that all of these factors come into play, but one or a couple of them are not the only factor that they look at. But things that they will look at on whether, if there's a dispute of whether somebody is an independent contractor or an employee, is there a written contract? Does the subcontractor have carry their own business insurance? Do they have their own liability and auto insurance? The control and supervision of the project, again, as we said in the definition, except the end result. Are they in a distinct business for others? Do they have a logo on their truck? Do they have a uniform with their name on it, their logo? Do they have that sales tax license? Are they incorporated to their business structure? Are they a sole proprietor? Are they incorporated? Those are things that lead them to be more. It's more likely, much easier to prove that they are an independent contractor, not an employee of anybody else. Do they bring their own tools and equipment, or are they using the tools and equipment of either the potential employer or the general contractor? And the length of the job. If the subcontractor is the only subcontractor of the general, they don't work for anybody else, they just work for them, but they are a subcontractor. They are told they're being a subcontractor. You're going to have a much grayer area in that one. Department of Labor, that if you don't have other customers and do work for others, that's going to be something they look at. And also the method of payment. Obviously, if they're paid through payroll, they're going to be considered an employee. But does the subcontractor invoice the the general for the work or the business, or are they paid by a 1099? So those are just several different factors that the Department of Labor is going to look at. So another quick quiz: independent contractor or employee? So let's say a business owner contracts with an asphalt paving company to seal the office parking lot. Very common. You see this happen all the time in the summertime. Typically, they're going to have their own trucks, their own equipment. Like say in my office, I'm an insurance agent. That's not going to be, if we hire them, there's really going to be no question that they are an independent contractor. How about a construction company that hires a crane operator to work exclusively for that company and to operate that company's crane? Sounds like an employee to me. They're going to ask, the Department of Labor would look through, go in and ask more questions. But if you're using the equipment of the contractor, and this is just one example, but you're using their equipment to do work for them and you don't work for anybody else, it doesn't matter how you're paid. More than likely, that's going to end up being an employee if that person is injured on the job. And here's a common one. A company hires a janitor to clean the office once per week, and then they issue them a 1099. Well, so let's just say you have an office and you hire a friend or an acquaintance or somebody's referred to you that, hey, they're just looking to do something part-time. And so they clean your office once a week. You provide all the cleaning supplies, vacuums in the closet, you provide all the toilet paper, and they come in once a week and provide that service. They're not in a business. They're not really set up as a DBA. They just come in once a week and you're the only office that they clean. That person slips and falls on their own wet floor in the course of that job. That one is going to be a gray area. You may end up having an employee on your hands depending on some of the other factors, but that's one to kind of watch out for. So independent contractors, the best thing that you can do is if you're hiring somebody, whether they're whether a subcontractor or you're just hiring someone to do a job, when you're asking them for that liability certificate, proof of liability insurance, also ask them for, if they have employees, ask them for that certificate of insurance. I see so many times that, a business or, they'll provide their proof of their liability insurance, and it's an insurance form, which means there's lots of little writing, and there's boxes that either, if they're checked or not checked, tells you whether or not they have that coverage. And there's a lot of times they'll say, well, yeah, sure, here, we have the proof right here. And you look at it and they've only checked the box for the liability coverage. That doesn't show that they have work comp coverage. And that can be an issue if they have employees and they're not carrying work comp coverage on them. So you really see this at Department of Labor, both in South Dakota and nationally with contractors. They've had bulletins come out over the past 10 years addressing, contractors, making employees subcontractors to avoid having to provide the work comp coverage, and also other things. There's unemployment insurance and other things as well that they're taking a look at. But just always, it's the 100% way to protect yourself is to get that work comp cover or work comp certificate of coverage. But say you have a sole proprietor, someone who's not incorporated, they don't have employees, but if you still, what can you do to protect yourself? Because as a sole proprietor, they're not required to carry work comp coverage. Well, number one, you cannot hire them. Number two, you can require them to carry work comp. Or number three, as of July 1st of 2015, you can have them sign an affidavit that they are acknowledging that they are an independent contractor and they're not an employee of yours and that they don't expect work comp coverage. So basically, this is protection in lieu of the work comp, having an actual work comp policy. When the whole history of this really came down to the contractors again, where maybe a contractor would hire, their painters, their framers, their drywallers, and they don't have a work comp certificate on file for those subs, and they may not have needed one because they are sole proprietors. But the insurance companies were still saying, hey, you know what, that doesn't matter. If they get injured, we're going to end up paying the claim anyway. So, we're adding their payroll. And from what I'd heard through the testimony at the legislative level, there were some significant premiums that had to be paid after audit at the end of the year. And so that was the whole reason for this affidavit. It actually was modeled after the same affidavit out of Kansas. So, and we've heard that it has worked there. So you think, well, yeah, it's a perfect solution, right? Well, not really. So the two important criteria is, number one, that they are a sole proprietor. They're a true sole proprietor. They're not incorporated. If they're incorporated or they're an LLC, they are a business entity. They're not a sole proprietor. And if they're a business entity, you have much more likely proof that they're an independent contractor. So, which kind of makes this not the affidavit not as important. But also that they do not have employees. Take the situation where you hire a subcontractor, and they're a sole proprietor. They don't have any employees, but let's say on your job they need some help, so they bring on that family member or a friend or someone who's retired and is looking for something to do, and they're paying them. They now have an employee. This affidavit does not protect the general contractor or the business from that employee being injured if they don't have the work comp coverage. So that's one thing you want to make sure of. The other thing is that it also doesn't give it's not 100% protection. That subcontractor, even though they sign it, even though it's notarized, the statute allows a rebuttable presumption that they are not an independent contractor but are an employee. And that would be something that would work through the Department of Labor and the court system. But that's why the only true way to protect yourself is to have the copy of a proof of their own work comp coverage. So when does workers' compensation coverage apply? Workers' comp, it's not an all-inclusive, just because you're at work and something happens to you, that it's automatically a compensable, and that's going to be the language that I use, a compensable work comp claim. So it is, the purpose of work comp is to cover work-related injuries, but the injury must arise out of and in the course of the employment, number one, and then number two, that the employment-related activities must be a major contributing cause. It means more than 50%. The injury, there has to be medical evidence of the causation tying it to the employment, related to the employment. Now, in South Dakota and in many states, a mental injury, you have a physical injury and you can have a mental injury. A mental injury on its own is not a compensable work comp injury in South Dakota. If you have a physical injury, and then as a result of that physical injury, it causes a mental injury, maybe it's a traumatic event, you're injured and you're, because of the recovery and the severity of the injury, it's causing some mental injuries that you have to see a counselor or a psychiatrist, then that mental injury would be a compensable claim. But in and of itself, say you witness a horrific event, but you're not physically injured, and the physical injury, so there's no physical injury to cause that mental injury. In South Dakota and in many states, that is not a compensable work comp claim. One of which would be, just take an active shooter situation. You might be involved in one of those situations. You're not injured, but you're traumatized by it. That is not a compensable work-related injury. So the benefits of work comp. What exactly do the benefits, work comp benefits, provide? I just want to point out, first of all, that in South Dakota, benefits are unlimited. There is no $1 million limit. As an employer, you can't say, well, I don't want unlimited benefits. I want to pay less premium, and I want to provide a certain dollar amount of limits. You can't do that. In South Dakota, workers' compensation coverage for all insurance companies, all insurance providers, they all, by state statute, have to provide the same benefits. And those are medical benefits, which is from $1, the work comp policy pays for all reasonable and necessary medical expenses. Once in a while, you see an insurance company will give just a little break in the premium if you take on a deductible. A lot of times, larger employers, they might have a deductible where they pay the first $250 or $500 of every claim, and so that helps. They get a little break in their premium, but then it also helps out on their experience modifier. The second benefit is disability. This is also known as indemnity benefits or lost wages. Unlike medical benefits, medical benefits, it happens on day one. Your related medical bills are covered. Disability, for the disability benefits to kick in, you have to be incapacitated, or you have to be off of work by doctor's orders for 7 consecutive days. So if you get injured on a Monday and you go back to work on Friday, though your lost wages for that week are not, you don't qualify for the disability benefits. You get injured on Monday and you go back to work the next week Tuesday, you've been off 7 consecutive days, and then you would be eligible to go back, and you'd get the 2/3 of your average weekly wage for that week off. Let's say that you have an injury where you're off for a couple of days, you come back to work, then maybe you're off a couple more days next week, then you're back to work, then maybe you're off for a few more days, but you're never off 7 consecutive days. You can be off for more than 7 days and not be eligible for disability benefits. It has to be 7 consecutive days. So, and right now, as of July 1st, it's indexed to inflation, I guess. The Department of Labor increases the maximum and minimum amounts. But basically, 2/3 of your average weekly wage is more than $781, you get $781. If it's less than $781, you'll be somewhere wherever it calculates out to a minimum of $391. So the most that you can get from work comp benefits, regardless of how much you make, is the $781 per week. Rehabilitation benefits, also known as retraining or education. Let's say maybe you work in a field or a job that requires physical labor. You're injured, and you're injured to a point where you're not able to return to that line of work, but you are capable of being retrained, maybe to be a teacher or a supervisor or some other capacity in another field. There's certain criteria that need to be met, but basically work comp would pay for your time off work and the cost of retraining to get you back to gainful employment at or better than where you were at before. And then the fourth is death benefits. This has been ticked up over the last few years by the legislature. A few years ago, the death benefit was $5,000, but now it has been increased to $10,000 to get it more in line with the cost of funeral expenses, burial expenses. So average weekly wage, this is going to kind of tie back to that, the disability benefits. The average weekly wage is your earnings. By definition, it is your earnings, which is, wages, salary, wages and salary, certain kinds of bonuses, commissions. And so there was an issue that came up a couple of years ago, 2015, for whatever reason, it just seemed like there was a lot going on with work comp Supreme Court decisions and Department of Labor hearings. But a plaintiff's attorney brought a hypothetical situation to the Department of Labor and asked for a ruling, a declaratory ruling about including all bonuses as earnings, which would result in, of course, a higher average weekly wage, which would increase the disability benefit that's paid. The way the Department of Labor handles or sees bonuses is in two ways. There's discretionary and there's non-discretionary bonuses. So basically, non-discretionary bonuses are performance-based. It's not necessarily commission, but employees, they earn them. It's something that they get as a result of their own performance, their own talents of doing their job. But the Department of Labor does not see discretionary bonuses as being earnings that would be used to calculate an average weekly wage. That could be something like Christmas bonuses, quarterly bonuses that all employees get. It's not just certain employees, but the company does well and they issue, they give every employee a year-end or a quarterly bonus that's not performance-based, not based on an individual employee's performance. Those are not included. And so what this process was, or what the question was, is that wanting these, the non-discretionary bonuses to be treated the same as discretionary. And the reason I bring this up is because the South Dakota retailers, Sean testified and was very involved in this process, as well as myself testifying, writing letters I guess in opposition to the ruling, because basically anything that increases the cost of a claim is going to increase your insurance premiums down the line. And basically, where this ended up is that the Department of Labor, they took another look at it. They said the policy is their policy. The way they look at it is correct and it's fair. It was then taken to circuit court that ruled that Department of Labor lacked the jurisdiction, and so that it went on to the Supreme Court. And the Supreme Court turned around and said, no, they do have jurisdiction, but you know what? Whatever you decide, you can't bring it back up to us anyway. It was a really strange situation, but basically nothing changed at the end of the day. So as a business owner, earnings, like I said, if you give a quarterly bonus to everybody, that's not going to be included as an average weekly wage. So also in 2015, this is something you want to be aware of if you're not already. I'd be surprised if you hadn't heard of this, but a Supreme Court decision, we call it the Wheeler decision, that came down on May 6, 2015. A little backstory on this is that there was Wheeler, the employee, was injured at one of her 3 part-time jobs. And the way it's been handled and the way the Department of Labor has handled concurrent employments and wages from concurrent employments is that the job that you are injured at, those are the wages that are used to calculate your average weekly wage. And so Wheeler contested that, took it through Department of Labor. Of course, their ruling was, only wages from the one part-time job. You can't add the other 2 part-time job wages together to increase the disability benefit. Went to the circuit court, who ruled in the same way, and then went all the way to the Supreme Court, which they actually ruled differently and said that all earnings from all concurrent employments will be included as to average weekly wage. So you might think 3 part-time jobs. I mean, it's you add 3 together, they're not able to do the other 2. Is it really add up to that much? Let me throw this situation at you. Let's say that this person has a full-time job. They're making $50,000 a year at one job, and they work temporary for you maybe during the Christmas holiday season. You need extra help, and you're hiring temporary seasonal workers. They get injured at your job. Their average weekly wage that your insurance policy will pay will be based on what you pay them and what they earn at their other job if they're not able to work at that job. Has to be a concurrent employment. There's some, of course, little nuances to this, but basically, if they're not able to go back to their other job, your policy, even though you're paying a premium on the wages that you pay, the benefits that your policy is going to be paid on the wages they earn from all other employments, and it can be significant. It's not overly common, but I've seen it in several cases, and it can be. So. Right now, so the question with the Wheeler decision that really had most insurance companies and business owners, I guess, concerned is that the case did not address retroactivity. And so basically, again, between the South Dakota retailers and several other business groups, the insurance companies, including myself, supported a bill that was introduced by Representative David Anderson out of Canton, and the bill passed unanimously, and it basically abrogated this decision prior to May 6th. So you may say, what was the point of that? Well, the point of that was that any claims that were open or even closed back whoever knows how far, the Supreme Court decision did not address that and whether or not those claims all then should be reopened and readjusted. Claims that have been closed for years or ones that are already being paid. It was really an actuarial mess to try and figure out what the impact of that would be, and nobody could really put a dollar amount on that. So the legislature did the right thing and abrogated it. So basically the law still stands, but only for claims that happen on or after May 6th of 2015. Currently, the constitutionality of this of this statute is pending before the Department of Labor. It has been for months. I haven't heard anything, so I don't really know where that is, or if there's, or what's going to happen with that. So moving on to when does a claim need to be reported? There's really two different reporting timelines. An employee, once they're injured, they have 3 business days to notify the employer. And basically, I get questions all the time. Well, I mean, when should a claim, how bad does the injury have to be? Well, basically, if the injury requires more than minor first aid, it needs to be reported to, the employee needs to report it to you. Once the employee has reported it, you as the employer have 7 calendar days to notify the insurance company. Those calendar days don't include Sundays and holidays. And there actually is a potential Class 2 misdemeanor fine of $100 if you don't. I've never heard of one being assessed, but there is a potential fine if you as the employer, once you receive notice, do not notify your insurance company. Because turning around, the insurance company, they also have a timeline. They have 10 days after they receive it from you to notify the Department of Labor, or they could have a $100 fine. And they have certain timelines of investigating and paying claims that also tie into that. So, back to the employee. Let's just say an employee comes in and they're injured on a Monday, first right off the bat. Monday morning they're injured. So when do they have to report the claim to you? So it's Monday, then they have 3 business days. So they have Tuesday, Wednesday, Thursday to report that claim to you. And say you have no knowledge of this claim. There's no supervisor that has knowledge of the claim. Nobody knows, and all of a sudden on Friday, they come in to report the claim and nobody has known anything about it. They've really just put themselves at risk of their claim being compensable for not meeting the statute for the time frame. Now, I will say the Department of Labor has been very clear and very open that any interpretation of the 3 days, if there's any dispute, I mean, it's the employer is going to get the benefit of the doubt. So there might be situations where maybe they didn't realize they were injured. The 3 days really begins when the employee, knowingly, reasonably, a reasonable person would realize that hey, this is a work-related injury, and so that's the 3 days. It's not a hard, fast 3 days, but it has stuck. There is case law that supports a claim being not compensable because of the employee not giving proper notice. So what about medical treatment? Who gets to choose the treatment? Well, the employee in South Dakota, the employee gets the first choice of their treating physician. So if they go to a chiropractor for their first treatment, they've chosen their first treating physician. Now, after that first treating physician, they can't. The employee can, if they don't know where to go or they're not really sure what they should do, they can take the recommendation of the employer. Maybe the employer, they have one of the, I'm trying to think what the clinics. I mean, send them to an acute care or something like that where they can get seen right away. But once an employee chooses their physician, they can't change. They can't just start bouncing around and going to any doctor that they want until they find the one that they want or one that tells them what they want to hear. They can't do that, and the insurance company or the employer is not on the hook for paying for those medical bills without written approval from the employer or the insurance company. So they get the first choice, but if they change, then they have to have written approval from the employer. Now, if the employer, for whatever reason, refuses to make any treatment available or pay, turn in the claim, the employee can go get it and file the claim. So now, say an employer wants to have their own opinion or their own medical examination. An employer has the statutory right to have an independent medical examination up to every 4 weeks at their own expense. So that wouldn't be something that the employee would be responsible for. So statutory reasons that a claim would not be compensable. So this would kind of seem fairly obvious, but being intoxicated or using illegal drugs Self-inflicted injury, you can't hurt yourself on purpose and then expect the work comp carrier or the employer to pay for your treatment. Willful misconduct, which is horseplay. Now, for me, back in Burke, when I worked in the summertime, anything that begins with, "Hey guys, watch this," that's likely not going to be a compensable work comp claim. And then refusal to use safety equipment that is required and provided by the employer or is required by law. So that's a big one, the refusal to use safety equipment. And we'll talk a little bit more about that in that it's not cut and dry, but say you have a policy and procedure that eye protection is to be worn at all times while they're on the job. If an employee chooses not to and is disciplined, and there's a record of them being disciplined for not, a record of not using their eye protection, and then let's say they end up then with having an injury of their eye that could have been prevented by wearing the eye protection, they've just made their claim likely not compensable. Nothing is ironclad. There's no guarantees, but that is a big one. If they refuse to use the equipment, the personal protective equipment that you provide and require as an employer to keep them safe and to help keep your costs down, they refuse to use it and they get injured because of it, and that safety device could have prevented the injury. That's the chance they take. And I always say, use this statute is very very powerful in safety meetings. Because basically, you can tell an employee, if you're not being safe and you're not doing the things that you're being trained to do and using the protections that we are providing to you, you're taking the risk that your claim is not going to be compensable. Therefore, you'd have to turn into your health insurance, which comes with deductibles and co-insurance and yearly maximums, and then resetting your deductible at the beginning of the year. There's a lot of financial risk to the employee in doing that. So moving on to work comp rates and trends in South Dakota. The NCCI is a company, basically an actuarial company out of Florida that is in the business of setting rates and calculating experience modifiers for most of the states. I think there's 38 of the states have NCCI do their actuarial calculations and rate and experience modification calculations. So basically, NCCI every year proposes to our South Dakota Division of Insurance loss costs, and this is the first building block of how work comp rates are developed. But you might hear a press release every year, sometime between anywhere from maybe April to June, that on average the average South Dakota loss cost for workers' compensation is going down 1% in 2017. So basically, that's the recommendation. That's an average across all 600 plus classification codes in South Dakota. And you can take a look. We're in what we call a soft market in workers' comp. The last time that work comp loss costs, which this affects your rate, loss costs as a whole increased was back in 2011. So we're on 6 straight years of decreasing workers' compensation loss costs, again, which directly affects your rate. Now, so you may see, like in a year, say the average is going down 1%. You get your renewal after July 1st, and you're like, well, my premium actually went up 14%, or it went down 16%. Well, what's that all about? Well, like I said, that 1% is an average. Okay, so 2017, an average decrease of 1%, but the swing rate, basically what that means is in any individual classification code, your rate, say if you're a fast food restaurant or you're a clothing store or retail store, your rate can deviate from that minus 1%, deviate 15% in either direction. So your rate could actually go down as much as 16% or up as much as 14% in 2017, after July 1st of 2017. So, and you can tell some of the other years, back in 2015, the overall average was almost 9% decrease. So that means that you could actually, you could have had a 6% increase in your overall loss cost or rate in that year, which that just kind of explains the average is not necessarily what's going to happen with your individual business based on the type of business that you are. So a few specific classification codes in South Dakota, actually in the retailers program that we see a lot of. I think these are like the top 8 class codes. You take a look at their rates. So in 2017, like I said, the average decrease is 1%. But if you have a dine-in restaurant, sit-down restaurant, your loss cost actually is going down 7%. Fast food restaurants was going down 9, hotels down 2, but hotel restaurant class code actually increased 3%. So there's one of those deviations. You go ahead and you look, just look at the dine-in, the restaurants, they've been, had pretty good decreases in their loss costs over the past 4 years. So what's the second building block of calculating your work comp rate? So I know in insurance, we're always very good. What's my rate? Well, in workers' comp, there's a few components that gets you to the rate. The first is that loss cost. It's based on the kind of business that you are. You'll have that classification code, a 4-digit classification code. Just to keep it simple, I'm going to say the fast food restaurants. So you take that loss cost, and then the insurance company has a multiplier. It's called a loss cost multiplier. So it multiplies that loss cost to a higher number. It never goes down, because what the multiplier is the insurance company, they have overhead, profit, the cost of handling claims. Different insurance companies are different sizes and have different expenses. So in South Dakota, your loss cost, like say for United Fire, for the South Dakota Retailers Program, the work comp carrier United Fire, their loss cost multiplier is a 1.38, which is pretty low. That's a really good loss cost multiplier. If you go and you look at the dozens and dozens of insurance companies that are admitted in South Dakota to provide work comp coverage, that number you can see over 2, which basically is doubling the loss cost, making the rate that much higher. But a 1.38 is very competitive and pretty low. You never see, hardly ever see them much lower. I've never seen one under a 1. But again, you might see them, in the 1.3-ish range. Anything from the 1.38 even up to a 1.6 are pretty overall pretty competitive. So, are pretty common. So that leads us to the experience rating. This is the next building block of what your cost is for your workers' comp. An experience rating is basically, this is the one thing that you can, we'll say, control, how to control your work comp costs. This is the one thing that you have some control over, and because it's all based on your claims history. What's happened, how many claims have you had? It's a very complicated formula, but basically the summary is that how many claims do you have and how much are those claims costing over the last 3 full years? And so that, the average starts out as a 1, but basically to qualify for an experience rating, because there's some of you that may not have one, we'll talk about that in just a second, but the overall premium, if you have a premium between over 7,500, you're going to have an experience rating, or an average premium for more than 2 years of that 3,750. So, whatever happens in this year does not count towards that experience rating. So, for instance, if your policy is renewing January 1st, the years that they're going to take a look at, NCCI, to calculate your experience modifier is 2016, 15, and 14. So that's the claims in that area. That's what's going to affect your experience modifier. If you've had lots of claims and they've cost a lot, you're going to get a multiplier. You're going to get a 1.2. I'll show you how that factors into your rate here, or your cost, in just a moment. What if your business isn't big enough to qualify for an experience rating, but you never have any claims? And so if you don't get an experience modifier, how can you get a credit or even a little bit of a debit for your claims history? Well, if you don't qualify for that experience modifier, in South Dakota, they have a merit rating plan. It's very simple. Basically, if you've had 0 claims, you get a 10% credit. If you've had 1, you get 5, and so on, up to if you have more than 4 claims, the max debit that you would have is 10%. It works just like the experience modifier, but it's just tailored towards the small businesses so that there is an incentive for them to not have claims too. So basically, this is how your rate is calculated. Taking a fast food restaurant, the first step is the loss cost, and this is their 2017 loss cost is 86 cents, and it's based on your payroll. For every $100 of payroll, it costs 86 cents for workers' compensation coverage or the loss cost. So the second step then is to take and multiply that loss cost by the multiplier. We're using the South Dakota Retailers United Fire Company 1.38. So here, this is your actual rate. Your rate per $100 of payroll for workers' compensation coverage is $1.19. So you just say you have $1 million in payroll, you divide it by $100 and you get 10,000 units. You multiply that by your rate. So your premium before your experience rating would be 11,900. And then after that, your premium could either go up or it could go down depending on your claims experience. So let's say you have a bad claims experience and you have a modifier, an experience rating of 1.2. Basically, it means you're paying 20% more for your work comp coverage because of your claims history. So, which in this case results in almost $2,400 more in premium based on that history. Now, say if you have a good claims history, you could, depending on the size of your business, you could end up with a 0.8. That's a 20% credit for your good claims history. That's almost a $5,000 difference between the two scenarios in the cost of their work comp coverage. So is having a safety meeting once in a while valuable? Yeah, it is. So what can you do to reduce the cost of your work comp coverage? Basically, trying to reduce not only the number of claims, but the bigger claims. 85%, and this is an average across the board, but 85% of the cost of claims is generated by 15% of the actual claim. So that means that a very small number of claims actually cost the most. Things that you can do in your is just workplace safety, having the required postings and signs, and as an ex-adjuster, insurance adjuster, just avoiding claims is the best thing that you can do. It's just best never to have a claim. And I know it's not realistic, but the more that you can avoid and reduce those claims, the better. Do that by self-inspections, learning from near misses, having a safety program, and a return to work program. So required postings, right on the Department of Labor website, there are 2 postings that you can that you are required to have on your wall or in your break room, and you can get those from free from the Department of Labor. As far as claims of prevention and loss control, this comes down to employee training. Focusing on the things that you are at most at risk. And really in South Dakota, one of the biggest things we have is slips, trips, and falls, and a lot of it has to do with weather. Defensive driving, some of the most expensive claims. If you have people on the road, driving claims are a significant amount of claims costs. Lifting, back injury, and then inspecting equipment, making sure that the safeguards are in place. So a safety program. Basically, do you have one? If you don't, how do you get one? What's the first step? So, using resources that are available to you, every month, United Fire Insurance Company, they put a safety article, print a safety article in the South Dakota Retailers Retail Profit newsletter. So, use that. If you're a small business and there's only a few of you, take out that article and use it and talk about it. It doesn't have to be, a PowerPoint presentation that takes an hour and a half and everyone, you don't have anybody working. They're all just at a safety meeting. It can be very, very brief and kind of unscripted. But use that article. I would encourage you to use that article. Also, if you are buying your business insurance through the South Dakota Retailers Insurance Program, you have access to a lot of safety resources through United Fire at this website. As a policyholder, you just go in there and there's dozens of topics and checklists and things that you can use to increase safety and contribute to your safety program. One of the things is United Fire just came out in the last few weeks with a distracted driving campaign called Worth It. There's the link to that program, but there's just a lot of resources and bringing a lot of awareness and giving you as a business owner some ways to educate your employees. So, because it may not even be your employees who are distracted. If they're on the road and someone else is distracted, that still can affect your employees. So what about return to work? What is a return to work program? It doesn't have to be, again, another big elaborate, big thick binder with a bunch of rules. Basically, it's just making reasonable accommodations, providing some kind of part-time or temporary work to an employee that's injured and maybe can't go back full strength or full time. They have some limitations to what they're able to do until they're fully recovered. So here's what the data says about return to work. The longer an employee is out of work, the less likely you're going to get them back. So if an employee is off work for 3 months, at that point you got a half of a chance of them coming back to work. If they're off 6 months, you have less than a 20% chance of getting them back to work. And in South Dakota, if a claim is open for 19 years, only 2/3 of that claim has been paid. There's still another 1/3 of the cost of that claim that will be paid. The longer a claim is open, the longer an employee, anything you can do to get them back and get them engaged will give better outcomes for both the employee and for your work comp program. I mean, the work is therapeutic and expedites the recovery, improves the morale. If this is a person who's part of a team, if the team is having to work overtime and the supervisor is having to cover, there's a whole lot of other dynamics that go into having someone who's not able to return to work. And overall, it reduces your claims cost. So this little graphic here, it's an iceberg. The tip of the cost is your medical and compensation, but below that is all of the indirect and hidden costs of a work-related injury, everything from lost time and efficiency, overhead costs, and again, just the morale of the group. So, right now you can't turn on your TV probably without seeing a diabetes commercial of some kind, and they always talk about reducing your A1C. Well, in diabetes, A1C is the marker. That's the test that tells you how good you are at controlling your diabetes. Well, I like to throw out there your safety program. What's your safety program's A1C? The 3 things that I see when I walk into businesses that tell me whether they're a good, safe place to work or if they're a great safe. Number 1, it's attitude, and that all begins with the owner, begins with leadership, and begins with management. The second, are they intentional? Do they have those safety meetings? If someone isn't using the safety equipment provided, whether they're a supervisor or whether they're just a coworker, do they say, hey, I don't want to see you get hurt, so use your safety equipment. And then that rolls right into the culture. Is it a culture of safety, or is it a culture of work comp as a benefit, not an actual, of something that can be avoided? So issues that we're keeping an eye on coming up is, again, that Wheeler constitutionality challenge, possibly the mandatory work comp. If that it sounds like a really great thing, but when you really start looking at it, is it really necessary to have something in place requiring it, and what's the bureaucracy going to look like to try to make sure that 33,000 businesses in South Dakota actually have it and keep it? And then the third is an increase in bad faith allegations and workers' compensation. We've really been seeing an increase in the bad faith allegations when it comes to claims. In handling a claim, if it's one of those where a claim is denied on compensability for whatever reason, and then if the fear is that you're going to be accused of bad faith, which in the insurance world, bad faith is a bad thing. It's not good at all. But these are issues that the retailers and myself, and United Fire, are keeping an eye on, and will be involved in if necessary, and it's to your benefit. So with that, I'm going to turn it over to Tom Diefendorf with United Fire to handle his part of the presentation on the SDRA endorsed Enhanced Business Insurance Program. Tom.
Thank you, Brad. I'm going to give a brief overview of the Enhanced Insurance Business Program, starting off with what's new. Effective January 1st of this year, workers' compensation is now included as part of the SDRA Enhanced Business Insurance Program, with the premiums and loss ratio calculations included in the program totals. The guidelines for our workers' compensation program are as follows. We are going to offer quotes for new business submissions and traditional lines of coverage, as well as for accounts currently written under our business program. Basically what that means is we're now accepting work comp submissions as long as they're accompanied by a regular business insurance program. We're not going to accept any monoline or standalone work comp quotes. Quotes will be issued to active UFG agents as well as to agents for brokered business through Brad's agency insurance benefits. United Fire does not guarantee to quote all risks, and all quotes are subject to the United Fire's underwriting guidelines. As far as eligibility, some SDRA members may not be eligible for coverage due to their loss exposure, their loss history, credit history, length of time in business, and other criteria as determined by United Fire. This is also not a guarantee to offer to place workers' compensation coverage on any account currently written by United Fire in the business insurance program. What that means is if we already have your package policy in the business program and you want us to quote your work comp, just because we have it in there, there's no guarantee we're going to do that, because work comp, we look at each work comp scenario on its own merits. So there's no guarantee of that. Some details of our workers' compensation program. Like with the business insurance, the SDRA member will receive a 5% association credit to their work comp premium, and we're applying the LCM of 1.38, which Brad referred to earlier, for the premium rating. Our standard United Fire LCM is 1.78. And the other detail is all policies issued for both insurance, the enhanced insurance program and work comp, will be eligible for our dividend program. Why choose United Fire Group? We know what we're doing. We are the sixth largest workers' compensation carrier in the state of South Dakota, with decades of knowledge and experience protecting businesses. We offer value-added services customers can depend on. Exceptional claim service. We pay what we owe, and we pay it quickly and efficiently. We have beneficial loss control services, which help you reduce your frequency and severity of losses. And we have outstanding customer experience, creating simple insurance solutions for policyholders at every touch point. United Fire is financially strong and trustworthy. We're a successful multi-billion-dollar asset insurance company, publicly traded, listed on the NASDAQ under the symbol UFCS for 3 decades, and we hold the rating of A Excellent from AM Best Company. Enhanced Business Insurance Program for the SDRA members. Basically, the enhanced program is now including the workers' compensation. When we started the program a couple years ago, we were just doing the regular package programs, and we were not doing the work comp. Now, as of January 1, as I mentioned, we're including workers' compensation. So that allows for a wider ranges of businesses to be eligible, a large variety of classes to be eligible, and as I mentioned, workers' compensation is now included. As mentioned before, some of the benefits are preferred pricing. All lines are eligible for a dividend program. There's 2 caveats to earning a dividend. The total earned premium in the program has to reach a $1 million level, and an acceptable loss ratio has to be achieved on an annual basis for the entire program. Other benefits for the SDRA members: we have a statewide agency force. We are very well represented in all parts of the state of South Dakota. We're actively talking to our agents, getting input from them on coverage needs, pricing needs. We listen to our agents, so we're staying up to date with what's going on in the marketplace. Our agents will help you create a customized solution for your needs. And currently, we service a great many retail accounts in South Dakota right now. Service to retail, what we do best. I'm not going to go through this entire screen, but this is a pretty good overview of the type of risks that we want in the retail program. We already have in the retail program. Some of the more popular ones are restaurants, hotels, motels, ice cream deli stores, bakeries, auto body shops, insurance agencies. That's just a nice wide variety of the type of accounts we have on the books and we want to have in the program. Referring to workers' compensation, I'd like to point out some of the ineligible risks. So this list is not all inclusive, but it's a pretty good indication of the type of workers' compensation risk we do not want to entertain: adult bookstores, bars, burglar alarm installers, chambers of commerce. I'm not going to go through the entire list again, but that's a pretty good list of the type of workers' comp policies that are ineligible. We have a number of United Fire agents that are available to help you decide if the UFG SDRA program is right for you. We have a listing that's available. For a list of the agents in your area, please contact Brad's office, Insurance Benefits, at the number listed on the screen or at the website listed there as well. In your handouts, we have a wide variety of payment options. It's the UFG Convenience with a Click handout. If you want to refer to that, there's EFT, there's pay by phone, there's monthly payments. We have a wide variety of different payment options for you.
And just to wrap it up, from my perspective as the administrator, the Enhanced Business Insurance Program now, including both lines, all lines of insurance, is way more broad than what has been in place before. So there's one dividend program. You get the preferred pricing. There's more options and flexibility for you as a business owner, whether you're large or small. And with having the one dividend program, we have a lot more premium. We've already hit the $1 million threshold. So it's just a matter of the losses for the group to reach the loss ratio threshold that we need. Again, the dividend program applies to all the lines. The rates are competitive. United Fire they're very well trusted by the local agents in South Dakota. Is a big reason why they've been endorsed. Tom lives right here in Beersford, so he's a real person. He is available and very personable, I might add too. So, and the program is growing. It's like I said, we've already hit the first threshold to get to the dividend. The second is just on the losses. So, questions. I have one question that came through, or is that? I guess maybe Sienna. What do we do at this point?
Yep, I can. I will read the questions that we have here. So the first one is every single accident an employer's responsibility when an employee is negligent or makes a bad judgment call?
Well, that comes back to that willful misconduct statute. No, every claim is not compensable. The compensability for every claim, of course, will be determined on the merits and the facts of that specific case. But if an employee, let's just say they're just at work and something happens to them the criteria arises out of it in the course of employment. So if they're at work, okay, well that's one step, but that the employment has to be a major contributing cause. So there's kind of two different answers to that question. If they're willfully if there's willful misconduct and they're not using safety appliance, the fact that they're negligent in and of itself does not bar them from their claim being compensable. It could, depending on what the negligence is, but just because they maybe do something incorrectly or make a mistake, that in and of itself will not make a claim not compensable. It comes down to intention. Also comes down to your training and what you provide and how well you enforce that.
Okay, next question. If an employee chooses a general practitioner who then refers the employee to a specialist, does that require the employer approval?
Yes, it does. Any physician after the initial choice of the employee does require the employer's written approval. And usually if they go to a general practitioner and they now have to go see an orthopedic surgeon, I mean it's typically not an issue. So that is really more of someone who wants to go doctor shopping and doesn't agree with the opinion of the first doctor they chose. That's really kind of where that is more geared towards. It gives it doesn't allow the employee just to go around until they find the answer that they want.
Okay. Another question. How is the cost of workers' comp determined for a small business with 1 to 3 employees?
So again, the cost of your work comp is number one going to depend on what is your classification, what your business is classified as, and that can be a wide range. You could be an administrative clerical, which is a very inexpensive class code where you're all office workers, or you could be a roofer, which is very expensive, or a tree trimmer, very expensive. So it depends on the classification of your business. Now it also depends, each of those class codes has like a minimum premium that's associated with it. So that if your payroll, if you don't have a whole lot of payroll that gets you above that minimum premium, you're gonna have a minimum cost of some kind, from anywhere from $300 to, $300-400 to, over $1,000 if you're certain types of contractors. So for a small business, it depends on, how risky of a job are your people doing, how are they classified? So that affects the rate. And then number two, how much payroll do you have? You could have 1 to 3 employees, but if they're all making really good money, it's going to cost more. The more payroll you have, and the higher risk class that you're in, the more it will cost. But there are minimums. So typically, for a lot of small businesses that we've seen that have come through the retailers program, if they're at a minimum premium, there's a lot of small businesses that are at a minimum premium, especially if you just have even one part-time employee or few.
Okay. Another question: can or should a business owner have work comp insurance coverage on themselves?
That really is a personal choice. I guess I don't have advice one way or the other, because you really probably want to look at the cost. Because if you're in a business, if you're paying yourself a salary, if you're, depending on how much that salary is, it could, you can easily tell how much more premium you are going to pay to cover yourself, and whether or not you feel the premium is worth it. I myself, personally, I cover myself. I include myself as an employer. But I would have to say, of what I see, more times than not, the employer does not include themselves. It's really a personal choice, and whether the cost of the premium you feel is worth it.
Okay, and I have one more question. If
Sure.
a person comes to work on Monday and reports they were injured on the job, but we think that they were actually injured over the weekend when they weren't working, do I tell my insurance provider, the state, or what's the proper procedure?
Yes, tell your insurance provider. I tell you what, the compensability on decisions like that. Because claims like this, it comes out what the doctor says goes, and that's been established by the South Dakota Supreme Court. If the doctor, in their medical findings, says that, yeah, from everything that they know, from everything that the employee has told them, that yes, that it's a compensable, it was work related, and it's compensable. But if you have knowledge otherwise and evidence otherwise, contact your insurance adjuster, let them know, let them investigate it. It's good information. And if you suspect fraud, there are two, I think they're Department of Labor or Division of Insurance. I'm not sure who they're employed, exactly what department they're employed with, but I think there's one in Sioux Falls and one in Rapid City, that all they do is investigate work comp fraud cases. That's something that you could pursue as well. But I just always say, let your insurance company know, because they don't know it unless you tell them, and the doctor doesn't know it unless someone tells them too. And you could have a case where a doctor has no idea that the person is doing activities that they're restricted from doing, and unless the doctor knows that, they can't note that in their notes and hold them accountable for it. So.
Okay, Brad, I have another question.
Sure.
Our nurses lift heavy patients. Their back injury has happened over time. They didn't report it within 3 days because it wasn't really bad at first. Now it's really bad. Is it too late to report it?
Well, that's one of those kind of gray areas. That's where the 3-day notice comes from, when an employee is reasonably expected to realize that their injury is arising out of the work, and the work's a major contributing cause. No, I don't want to say it's never too late, but you can always file the claim. The insurance company is going to investigate it. The one thing, if you have a claim that has gone on for a while, that you're really it just creates more questions. There's just going to be, the insurance company is going to take a closer look at it. They're going to have to document their file, because they get audited too. But the adjuster is going to have to investigate it. Doesn't mean that it's not going to be compensable. Just means that there's going to be more they're going to take a closer look at it. And it's kind of one of those gray areas. You know, carpal tunnel is another one of those that you know, kind of falls into that category where it occurs. You know, they call it cumulative trauma. Happens, you know, occurs over a period of time.
Okay, great. Well, I think that's all the questions we have. I want to thank Brad and Tom for providing us this information today. And I'd like to mention again that if you have additional questions, you can contact our office at 605-224-5050. And for more information on any upcoming webinars or seminars that we might have, you can visit our website at www.sdra.org. Under the training tab, click on webinars and seminars. And again, our website is sdra.org. Thank you everyone for participating in today's program and have a great day.